Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe for multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines, and many other sectors.
Good morning, ladies and gentlemen. Welcome to Market Today on Business Today Television. I am Shail Bhatnagar joining with you on this wonderful Wednesday morning. The mood that has come in from overseas markets is a bit weak as far as the close on Wall Street is concerned. All that and more we'll look after the headlines, which are now presented to you. Indian stocks are likely to trade lower on Wednesday as strong overseas selling pressure further dents sentiment on Dalal Street. Earnings remain the key to movement of stock prices. Auto giant Mahindra & Mahindra and a clutch of pharma stocks report their third quarter performance today. Extreme caution is advised on the long side on high beta, low ticket public sector enterprises stocks as they gyrate to excessive volatility in the system. Valuations are key to where these stocks are headed. A very warm good morning to you all who are joining us on Market Today on this fine Wednesday morning in Delhi. It's Basant Panchami. The weather is absolutely bright and clear. The sky is deep blue, and the sentiment on Dalal Street, unfortunately, seems to be taking a dip for today. Let's just see how markets are structured for Wednesday. Remember, this is T-1 for Nifty. It's a day ahead of its weekly expiry. The daily chart is there right in front of you. As you can see, yesterday was a 127 point uptick on the index. It closed somewhere in the vicinity of 721,743. This was, of course, near its day's high. But what has spoiled sentiment for Dalal Street is a series of negative moves that have come in on Wall Street. We'll also show you two very important screens today. One is the 10-year US bond yield, which has spiked to the highest level that you see on November 23rd, and this number is somewhere in the vicinity of 4.3%. The PCR will, yes, this is the screen that I'm talking about, and it's led to a very, very sharp fallout as far as Wall Street is concerned on stock prices. We'll just get the comparative screen in front of you. Wall Street ended remarkably lower as far as the prices are concerned, because the 10-year US yield jumped about 11 basis points to 4.28. This is, as I've said, the highest since November, and you can look at how the losses on Wall Street totaled up, and they stood at something like 1.4% lower on the S&P 500, and the Nasdaq shed 1.8%. The biggest loser was the small cap index, the Russell 2000. That screen will also come in front of you, and that shed about 4% on fears that the cut in interest rates, which was expected in the first quarter of 2024, has now been pushed dramatically back. They are not happening in the first half of calendar 2024, at least. Those are the fears that have been exhibited, and they are now playing out dramatically as far as the prices on Wall Street are concerned. This weakness is also creeping into Dalal Street. Let's look at how the Nifty is structured for the today. Like I mentioned, it's T-1 on Wednesday. Tomorrow we see the weekly expiry of the Nifty, it being the Thursday of the week, and therefore you'll see some weakness creeping back into the Nifty as far as prices are concerned. Remember, it ended about 127 points higher at 743. Cues from the gift Nifty are also pointing towards a weakness, and this is something which is worrisome, because this could end as a dead cat bounce, the move that we saw yesterday. Now, what else is in pain? Because Nasdaq has corrected sharply, it's quite possible that the uptick that we've seen in software stocks over the last 1 week or so, that pauses for a moment. Therefore, we'll be keeping eye on mid cap and large cap stocks such as Infosys, TCS, Coforge and Emphasis. Banks have been under selling pressure. Of course, yesterday was a bounce from 200 DMA as far as the bank Nifty is concerned. More on that later. But given the move that we've seen on Wall Street, you just might see profit booking happening on banks. So where does this leave the Nifty? Still marginally higher as far as the February F&O expiry is concerned, but the trend seems to be weakening. Therefore, you'll just might see a gap down on the Nifty and then an acceleration towards a weaker close, because yesterday there was a very sharp uptick as far as call prices were concerned. Those calls are most likely to be unwound. FI data over the last 3 days is mildly positive. About 1,000 crores worth of buying is seen, but not much of strength as you can make out in stock prices. Therefore, traders are advised that any move towards the first resistance, the pivot that you see on the Nifty on a daily basis, probably needs to be sold into, and the bulls should wait for stability. That's the view coming in on the Nifty. Now let's take a look at how the bank Nifty is likely to perform. Remember, it's Wednesday, therefore it's the weekly expiry for bank Nifty futures, and the fact that the index bounced fairly sharply from its 200-day moving average yesterday, up 620 points at 45,502. This is the chart that you see, and over the last 2 or 3 weeks, you've seen the 200-day moving average sort of providing a very strong bounce for the bank Nifty. Let's see how long that holds, but the fact remains that banks are likely to come under selling pressure, and therefore let's hope that the 200-day moving average sort of holds ground. What's more important is that bulls are offering very small support to the bank Nifty. So 44,500, first 45,000, then 44,500, and then maybe even 44,000 is a possibility on the bank Nifty. Not today, but probably somewhere in the vicinity. This chapter is getting a bit weaker and weaker. As far as earnings are concerned, well, the eye remains on counters such as Mahindra and Mahindra, counters from the pharma space. A lot of them are going to announce earnings today, in particular Gland Pharma and Glenmark Pharmaceuticals. So these are the 2 or 3 companies that we see performing their quarterly numbers today. Remember, it being the 14th of the reporting month, I think the maximum number of companies in the vicinity of above 500 are going to report quarterly numbers today, and the major ones, as I have mentioned, are Mahindra and Mahindra within the Nifty pack, as also Aditya Birla Fashion, Glenmark Pharmaceuticals, Gujarat State Petronet, India Bulls Housing, Ipca Labs, Muthoot Finance, Natco, Narayan Hirdaralya, and within the FO space, NMDC. So these are the stocks as well as data that we are looking for as far as prices are concerned. 839 as far as the market is concerned. Let's also look at how the US closed. As I have mentioned, the market was fairly weak. You have a comparative chart in front of you, and yesterday's close was a bit worrisome on the Wall Street, simply because inflationary fears are coming back in.
Darwin Platform group of companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe for multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines, and many other sectors.
Celebrate 32 years of leadership in business news with Business Today. From the groundbreaking AI cover of Sundar Pichai to PM Modi's exclusive on G20, we redefine headlines. Now our 32nd anniversary issue explores India 2029, the 5-year agenda, with industry titans sharing exclusive insights. So, just BT it for unparalleled perspectives. Business Today, 32 years of leadership, innovation, and business brilliance. Subscribe now. In today's rapidly evolving business environment, when risk is omnipresent, managing risks is no longer just about ticking a few boxes. Businesses need to maintain a panoramic view of risks to stay ahead of the curve. Join us to explore how organizations can rethink risk to unlock new possibilities and become fit for future. At PwC presents De-Risking the Future in collaboration with Business Today.
Welcome back. Let's look at the stocks that just might be in hectic trade on this Wednesday morning on the Lal Street. We'll start with Wipro. Remember, for the last 2 or 3 trading sessions, Wipro has been a top call on the long side by several of the technical analysts who've joined us on the show. So the company, which is a tech major, has invested $66 million in a US-based company to strengthen Wipro's consulting and services capabilities in the insurance sector. Wipro, if you look at the stock price yesterday, was in the thick of trade as far as markets are concerned, and the stock actually closed fairly sharply in the green. And let me just tell you what the price is on Wipro were. It's crossed above the 500 mark, up 2.2% yesterday, 513. So keep an eye out on Wipro. Let's look at some other stocks as far as prices are concerned. We'll also pay attention to Bharat Electronics Limited. The company's won a contract worth 2,167 crore rupees from the Indian Navy to supply electronic warfare suit to one of the warships that the Indian Navy has. BEL has been in the thick of trade as far as prices are concerned, trading near a record high. Oil India, this is one of those stocks that has run up very sharply over the last 2 odd months at a record high. The net profit for this oil and gas major was 1584 crores for the month of for the quarter ended December. It's down 9.3% over the same quarter year ago, and the revenue as well also slipped about 1% lower to about 5,324 crores because of lower realization in crude oil prices. Z Entertainment will be in focus. The company registered a 141% year-on increase in net profit to 58.5 crore rupees for the third quarter, despite a weak overall number. Revenue from operations fell 3% to 2,045 crore rupees. We'll be keeping an eye out on high beta item IRCTC. This is the state-owned railway catering company. It's clocked a 17.4% rise in standalone net profit for the third quarter to 300 crore rupees. Revenue actually rose 22% to 1,118 crores in the third quarter. So these are the 4 stocks: Wipro, BEL, Oil India, Z Entertainment, and IRCTC that will be looked for as far as trade is concerned. Let's look at some other data that is right there in front of us. Some points I wanted to highlight as far as bulk deals were concerned. We'll keep an eye out on a high beta item, Tourism Finance Corporation of India, block deal worth about 9 lakh shares happened yesterday. Tata Group company TRF Limited, there's a buy of 87,455 shares at a price of about 490 rupees. We'll also be looking out for Mahanagar Telephone Nigam Limited. Remember, this is a government telecom company. 20 lakh shares have been traded at in a single bulk format at 39.24 rupees, 39.24 rupees, and a mutual fund advisory company called Prudent Corporate Advisory Services, based out of Ahmedabad, a transaction of about 32 lakh 51,000 shares at a price of 1250 rupees. This is how the markets are, ladies and gentlemen, as far as the pre-open trades are concerned. We'll also be paying attention to a lot of metal stocks. Remember, they were under selling pressure yesterday, in particular Hindalco. The company's reported a decent number as far as its third quarter performance is concerned. I'll get those numbers for you, but for the moment, this is what the setup is. A weak opening is most likely from Dalal Street as far as cues are coming from GIFT Nifty, and more weakness seen on the Nifty, especially on the Bank Nifty. Remember, it's trading in the vicinity of its 200-day DMA. Also noteworthy is the Nifty Mid Cap 100. Remember, these are indices which have been on record highs, a running spree, but over the last 2 or 3 trading sessions, the index has contracted a bit. It's also trading at its lowest point since January of 24, January 24th. So that makes it a 3-week low. Consistent selling pressure coming in over the last 3 trading sessions, and this one also needs to be watched. Also, in the vicinity of the mid cap Nifty is a view on the Nifty small cap index. It's also slipped for 4 consecutive sessions. Yesterday's close was at 15,643. It recovered very sharply from an intraday low of 15,225, and this is a level which has been supported by the 50-day moving average as far as the small cap index is concerned. We'll be keeping an eye out on all PSU stocks, specifically from the rail segment, IRFC in particular. This counter was at top form all of yesterday, rising about 16-17% in trade. Let's look at how that one is performing. So IRFC is something that we'll be looking at in the format as of yesterday. We'll also keep an eye out on the delivery statistics. I'll tell you within the Nifty which are the maximum deliveries that have come up in terms of percentage rise. Sun Pharma, the yesterday's delivery was 81% of the 1 month average, compared with 60% earlier. You have a strong delivery statistics coming in, Infosys, L&T and HCL Tech as well. We are waiting for Mr. Gaurang Shah to join us shortly. He's the Head and Vice President of Research at Geojit Financial Services. At 8:50, we are waiting for the market to open in another 10 minutes. We'll take a very, very quick break at this point of time, and we'll be back with you shortly.
Celebrate 32 years of leadership in business news with Business Today. From the groundbreaking AI cover of Sundar Pichai to PM Modi's exclusive on G20, we redefine headlines. Now our 32nd anniversary issue explores India 2029, the 5-year agenda, with industry titans sharing exclusive insights. So, just BT it for unparalleled perspectives. Business Today, 32 years of leadership, innovation and business brilliance. Subscribe now. In today's rapidly evolving business environment, when risk is omnipresent, managing risks is no longer just about ticking a few boxes. Businesses need to maintain a panoramic view of risks to stay ahead of the curve. Join us to explore how organizations can rethink risk to unlock new possibilities and become fit for future. At PwC presents De-Risking the Future in collaboration with Business Today. In today's rapidly evolving business environment, when risk is omnipresent, managing risks is no longer just about ticking a few boxes. Businesses need to maintain a panoramic view of risks to stay ahead of the curve. Join us to explore how organizations can rethink risk to unlock new possibilities and become fit for future. At PwC.
Welcome back on Market Today. We are joined by Mr. Gaurang Shah. Good morning to you, Gaurang, and a very warm welcome on Market Today. How do you see sentiment on Dalal Street? A bit of weakness creeping in via Wall Street. Fears that the interest rate cuts that were supposed to happen in the first quarter of 2024 seem to have been pushed back.
Thank you, Shail, and morning to all of you all. Good to see all of you all this Wednesday morning. Well, so I think the Fed did not say that it will first cut the interest rates in first quarter. It was the market great experts, great minds who had an anticipation before the chair can think of it. So honestly speaking, these fears are unfounded according to me, and I have always mentioned, Shell, that US has to do what US has to do and India has to do what India has to do. This thought process that we have to ape the US and the UK and the Europe, I think has to put to be rest for good, because at our data points, we recently had a credit policy. We recently had our own RBI governor give out verbatim in terms of the state of economy, the global outlook, and also what the situations are in our domestic market. So if US has to correct because interest rates are not going to be cut as per great market experts in the first quarter, and we have to react accordingly. And honestly, if we have to react today, and I mentioned this last time also, Shell, I don't think there is going to be a much deeper side given the current dropback of events below 21,600 on the Nifty spot. Plus minus 50-60 points here and there cannot be ruled out, but more deeper than 21,600 as of now looks a little bit difficult. I would not say impossible. And if you get a dip towards those levels of 21,600, I think that's going to be a great buying opportunity.
Okay. With that background of sentiment in your mind, let's quiz Gaurang on what is he likely to purchase in this kind of a dip. Remember, the first high as far as the Nifty that touched was 22,072 in the month of February, and we are about 250 points off that number. So Gaurang, what is your buy list? What is your wish list?
So, Shell, I think two names I'll give out over here. These are more from the, your mid caps or small to mid caps, or maybe mid caps to large cap as we go forward from here on. The first name is from the infrastructure space, a company that came out with a very decent set of numbers, has been outperforming in its own space with its own peers, and that is NCC Limited. I think the stock was at about 220, 225 yesterday. Correct me if I'm wrong. It's a great buying opportunity, NCC Limited. From a long-term point of view, these are all long-term ideas, Shell. And one from the public sector banks, because over the last fortnight, you saw most of the companies which are government-owned run away to its glory. Banking also did its own, but if one bank I have to point out, and I'm quite surprised to see the improvement in asset quality, provisioning, gross and net NPA, etc., is Punjab National Bank, PNB. This is also at somewhere close to about 220 or 225. These are some, beg your pardon, 120 to 125 Shell. These are some great investment ideas from a long-term point of view.
Okay, let's look at NCC in front of us. The market capitalization is about 13,700 crore rupees, and the price of 218 that you see in front of us is the highest since 2008 of January. So it's about 12 plus 4, almost a 16-year breakout in price that is about to be witnessed, and at 13,700 crores, according to Gaurang, it's a fairly decent company from the mid cap space. Revenue, surprise, surprise, is at 19,300. So there is a deep undervaluation. Mostly, normally, in a normal working environment, market cap to sales should be in the vicinity of 1:1, and this is a very huge profit making company. 662 crore rupees is the profit after tax for the trailing 12 months, and this is on a earnings of about revenue of about 19,300 crores. Deeply undervalued and under researched, Gaurang. What's really also a bit worrisome is the promoter ownership of just 22%. Do you think that's a pain point, or that's par for the course?
I would look at the performance rather than the promoter holding, and I don't think promoter holding will play any serious significance in terms of long-term investments. If you go to see, the order book of the company has been consistently growing. Company has been improving on its execution capacity, Shell, and that's what is visible on the numbers front. So, promoter holding at these levels, I don't think it's a serious significance.
Okay, I'll just mention the quarterly numbers which have gathered attention from Gaurang. Revenue in the third quarter ended December was 5,260 crores for NCC, compared with 3,909 crores in the year ago quarter. So that's a very sharp jump coming in. Profit after tax stood at, just a moment please, 229 crore rupees for the past 3 months, compared with just a moment, 309, 166 crore rupees. So that's a very sharp uptick in profit as well as profitability, as also a rise in top line. So NCC is something that you should look at as far as Gaurang is concerned for the long term. He makes it very clear. Gaurang, your views on the kind of profit booking that we've seen in PSU stocks 3 days prior to yesterday, and the sharp bounce back at least in some of the railway stocks that we saw in trade on Tuesday. How do you read sentiment in this part of the market?
So the law of gravity tells me whatever goes up has to come down, Shell, and whatever goes up in a very short span of time has to come down equally faster. And if you look at the names that had run up just because they were government owned, there was some of the names. I mean, I give absolutely total credibility to the name of the company and the management, but your stock valuation reflects the earnings. This is what I've been taught. And if earnings don't justify, then those values of those stocks which have run up in maybe a fortnight or 3 weeks, they come down equally sharper. And history is witness, Shell. Small and mid cap and micro cap, when they go up like as if there is no tomorrow. And when they come down as if
Yes.
there is not another minute left or another second left. So, and sad part is that despite of getting burnt their hands again and again and again, small investors, medium size investors have always got attracted to these entire universe of mid, small, and micro cap universe. Not surprisingly, the kind of correction that we saw, given the kind of run up that we had, and I think it was more to do with the hype. And I was surprised, Shell, honestly speaking, the kind of advices or voices that were going up in the Google and WhatsApp unorganized universities after the Honorable Prime
Yes.
Minister just made a passing reference to LIC, and that was with respect to the last government's 10-year performance and this government's 10-year performance. He was just making a comparison. He was just showing you the books of accounts. But people in this unorganized universities thought that Mr. Modi has now become the fund manager. I really beg to differ, Shell. Kind of
Yes.
questions that have been asked over the last 3 4 days. For the love of God, he is the prime minister of the country and not the prime minister of the stock market.
Yes, absolutely. Gaurang, what we'll do is we'll welcome Sakshi to the panel, and I'll just take a look at the pre-open prices. The Nifty is opened in sync with what the expectations were. Sadly, it's a 151 point cut at 21,591. So all that the Nifty had gained yesterday has been given back to the market, at least in opening trades. Let's look at the index heavyweights, and then we'll look at the earnings boys. Okay, what's in pain? Banks. ICICI 3% lower, 990. This is more or less expected. 1.34% cut on State Bank of India, 703.90. HDFC Bank at 1382 is 12 rupees lower. Infosys is almost 20 rupees lower at 1665. Remember, there was a sharp cut on the Nasdaq as well yesterday. How about TCS? 6 rupees lower, absolutely flat, nothing to worry about. How about Axis Bank? 0.5% lower, 1064, nothing to be worried about. Let's look at Reliance. Okay, 2900 for us, about 1% lower, 30 rupees down at 2900. Let's look at how earnings are being taken care of. I'd just like to see IRCTC 2.5% higher. It was a very, very strong show, 930 rupees. There is pent-up buying happening on Bosch Limited. Remember, the company announced earnings at the dying hours of yesterday's trade, 27,000, 2.6% higher. National Aluminium is 5.7% higher, 150. Let's look at the losers side. Pain in BHEL, 196. Remember, the company announced a loss yesterday, 7% lower. Hindustan Copper, 227.90, 9% lower. Z Entertainment, the numbers were good. Revenue, however, disappointed at 182. It's down 3.5%. And let's look at a host of other stocks in the NSE 500. The top gainers being NBCC, 4.5% higher, 129. You have IRCTC again, 1.2% higher, 921.90. IRFC, yesterday's winner, again a percent higher in pre-opening trade, 155. And a very, very warm welcome to Sakshi.
Very good morning to you, Shail, and very good morning to you, Gaurang, as well. Good to have you, both of us. Tell us, Gaurang, I want to understand from you the way the US markets really reacted overnight, a sharp fall coming in on the back of higher than expected inflation numbers, the bond yield spiking again as well. Is this bringing us back to square one where we started off from? Just a week back, we were thinking that perhaps things are getting better on the inflationary front. Central banks across the world may be looking at interest rate cut as a theme. Experts on our channel have been talking about that being a major theme to track for this entire year as well. How would you really look at this fresh move on the US and that further deter markets now?
I don't think so, Sakshi, but I mean, and let us not forget, we were also the fact was also in front of us that US and UK had a multi-decade high inflation. When you are at that kind of a level as far as inflation is concerned, for you to come back to the new normal takes a long time, and between that period you get shocks of ups and downs. uh, at one point of time you will get an inflation which will show you signs of absolutely comfort and there is no distress, and immediately after that you will see an SOS being sent in terms of higher inflation and kind of total uncertainty and chaos. So it was not, and I always believed, and in fact, the Fed chair also said that I will not give out of time frame as to when we will start cutting interest rates because the situation with respect to inflation and unemployment has to settle down. It cannot happen in 1 quarter, 2 quarters, or that kind of a time frame. It takes a lot of time. So I mean, and as I mentioned, I was in conversation with Shail just before you joined in, Sakshi. If I get a dip somewhere close to about 21,600 or below in our
Mm-hmm.
market, then I think it's
Mm-hmm.
a great time to buy. And we are in a much more better situation compared to UK, US, and some of the other European countries.
Okay, fair enough. Well, I'm sure you must have discussed some of the stocks as well, but I wanted to take your view, Gaurang, on Nalco as well. Earnings have come out much better than expectations. EBITDA margins have all, been better, and we've seen the stock reacting on a positive way again, about 4% higher in trade, 3.5% now, 147 odd or so. What would you say on Nalco particularly?
So, I mean, numbers for Hindalco was also not bad according to me, but what happened yesterday, that's in front of us. So it just take a cue out of that. And metals, whether ferrous, non-ferrous, is always exposed to the international markets because of the kind of very close connectivity, especially with the news flows that comes out from China, Sakshi. But
Mm-hmm.
I think if you have a long-term time horizon, then and long-term by definition is at least 1.5 to 2 year plus because of the close international connectivity of the entire metal universe and the news flow from China. Then I think names like Tata Steel, JSW Steel, JSPL, Hindalco, Vedanta, even Nalco, as a matter of fact, it's a very strong balance sheet with respect to the growth opportunities that lies in front of it.
Okay. We are at 908 and we are waiting for Mr. Rudra Murthy to join us on the technical panel. But let me mark some prices. They have settled as far as pre-open trades are concerned. Within the Nifty, HDFC Bank is slipping 1.3% lower, 1376. We have a strong move coming in on National Aluminium, 2.8% higher, 146. NBCC is 2% higher, 126.90. Hindalco is now opening in the green, thankfully. Yesterday, cut was about 11% on the downside. We have BEL. The company's won an order of 2,167 crores from the Indian Navy. It's opening about 0.4% higher at 177.25. The Nifty settled 165 points lower, 21,578. The Nifty Bank is likely to open at 45,000 points, down about 490. Remember, it's the weekly expiry for the Bank Nifty, and yesterday saw a very strong bout of build-up of longs. Those will be unwound because prices are down, and you will see further selling pressure creeping into the Nifty and the Bank Nifty universe. ICICI is settled 10 rupees lower, 1009. SBI settled 8 rupees lower, 705.55. Kotak is settled 13 rupees lower, 1723. Axis Bank has settled 9 rupees 50 paise lower at 1061.30. Sakshi.
Absolutely, Shell. Let's also look at Paytm now. I think in the pre-opening trade, it's again showing a downtick of over 6.6% now, and maybe looking at an opening of around 355 odd levels. Remember, yesterday Macquarie's report indicated that they are looking at a price target of 275 and a bear case scenario of 180 rupees. So, Gaurang, to you, are the concerns as grave as have been pointed out as far as a customer exodus is concerned, or maybe the questioning on the business model itself as far as Paytm is concerned, as by pointed out by Macquarie?
Well, rightly pointed out, and the concern will always be there when you have your presence in the great new avatar, new age technology companies which had got launched. And we all remember very well because it is not long ago the history with respect to the IPO pricing of this particular company, the great listing and the great fall. So the rise and the fall of new avatar, new age technologies are a big question mark. And more than that, I would give total credit to the statements made by the Honorable RBI Governor during the credit policy and post that. I think it was yesterday or day before that there is not going to be a second look at whatever has been done in with respect to the, and more importantly, Sakshi, I was surprised to hear and read the statement of Mr. Uh, Sharma that he does not know what went wrong. I mean,
Hmm.
come on, bro, you are handling a company with a payment interface. And if you don't know what has gone wrong, then who's going to know? So, I mean, I was quite surprised. Let me say this. We had a coverage, our targets were in the company under review after the developments that we have witnessed over the last maybe about fortnight or 2 weeks. And it remains to be seen where this so-called new age avatar company finds its floor. For as of now, I think it's on a free fall, and little bit cautious is definitely that can be advised over here.
Cautiousness is advised over here because it is a falling knife. But for all those viewers who may be looking at this attractively, what would you advise them? They may be saying, this stock had an issue price of 2150. We saw 1900, and the stock is now available at some 70% discount. What would you tell them?
If wishes were horses, beggars would ride. I think that's the most appropriate statement. I don't think, and it is history. I mean, 1500 वाला स्टॉक 20 रुपया हुआ है, 20 रुपया वाला 5 रुपया हुआ है. Let us not forget, we have great examples in the stock market. So just because, and we all know, there is no perfect thumb rule how to fundamentally justify the valuation of this new age avatar company, Sakshi. It will all depend upon analyst. For me, it will be a different thumb rule. For you, it will be a different thumb rule. For my good friend Shail, it will be a different thumb rule as far as fundamental analysis of new age, new avatar companies are concerned. So let's not go into that argument of what the valuation of IPO floor was, what the listing was, what the fall was. I think when you have uncertainty, it is always to stay at on the banks of a river or on the shore of a sea rather than jump into the turbulent waters.
Okay, Sakshi, this is a point that Gaurang has made very well, and we need to emphasize it again and again. Just because a block deal happened at 450 rupees from foreign institutional investor necessarily does not put support price on the stock, and we've advocated always never to catch a falling knife. Let the knife stabilize, let it fall as much as possible, and then there comes a period of consolidation in every stock. No stock rises in V format, यूं और यूं, ऐसा नहीं होता. So it falls first, then goes sideways, and then if things are good, it resumes an uptrend. But in the case of Paytm, you'll see the kind of regulatory overhang that has come, and the kind of disconnect that the owners have with the regulator of the sector. That is what is bearing very heavy on the stock. There's just no reason to look at it at from the buy point of view. A stock that has corrected 70% can also correct 70% from the current level. Mathematics of it, we've seen that happening many times. Let's again focus on the pre-open rates. We are looking at BEML trying to open at about 2771. Okay, we have prices, Sakshi. 183 points lower on the Nifty, 21,560 for you. The Nifty Bank on its weekly expiry day has opened 400 points lower, 45,100. There's a massive sell on the IT index. This is something that I had pointed out, that software will undergo a correction. 700 points lower on the IT index, 37,480, 1.9% lower. Let's look at the pain that is coming in. I want to see what Infosys is doing. 1.9% lower, 1653. How about TCS? 1.5% lower, 4084. Banks. What is HDFC Bank doing? 1377, 1.2% lower. What is Axis Bank doing? 0.5% lower, 1064. How about ICICI Bank? 7 rupees lower at 1012. How about Reliance? Okay, flat at about 29.23. Sakshi, there is enough and more pain in the market. All 10 stocks within the index heavyweight space are in the red. Let's go to Nifty FNO and look at stocks which are causing this massive pain. Okay, It's Gujarat Gas 8% lower, 517.60. Aurobindo Pharma 2.9% lower, 996.20. Z Entertainment post earnings 3.8% lower, 181. BHEL remains in pain, 2.6% lower, 207. A very quick look at NSE 500. Okay, MTAR Tech 10% lower, 1722. Paytm 8% lower. This is a fresh all-time high, 340. We have RCF 6% lower, 137. MMTC 5% lower, 73.55. A very quick look at what's happening in the PSU space, and then we'll open up this to questions. Okay, I'd just like to watch stocks in the green first. National Aluminium 4% higher, 147.30. NBCC 5% higher, 130.60. Dredging Corp 2% higher. BEML 1.4% higher. Losers, Galore, Irida 5% lower, 154. BHEL 3% lower, 206.50. National Fertilizers 2.9% lower, 98.40. Let's go to Mr. Rudra Murthy. He's the research head at Vajna Investments. Good morning to you, Mr. Murthy. How do you see the market open?
Very good morning, Shailendar. See, first of all, we have seen this gap down open happening because of the overnight cues what we got from US market. Undoubtedly, inflation was much above the expected level. For me, technically, if you see the market, I understand shorting needs a different kind of approach towards market and towards stocks. When you do that, this is not a great risk reward to short after a 150 kind of a fall on Nifty, and on Bank Nifty when you're already seeing a fall of about 500-600 points. I don't want to short here or advocate any shorting here. You have to wait for a bounce if you want to short the market. Other way around, risk reward is very, very favorable if you can pick stocks specific at these levels and buy those stocks which you were waiting to buy and the price was not comfortable to you. These are great opportunities to buy selectively on stocks where you are comfortable and where the fundamentals are strong. Markets will paint all the stocks on the same brush when these type of overall macroeconomic kind of fall you see in market. These are times when you have to cherry pick and buy those stocks which you were waiting to get that comfortable price levels. So for me, at index level, yes, look at Nifty. The lows what it made recently on futures is 21,625. So for me, the support at around 25,500, 600 zones are very, very strong. I'm referring to Nifty future level, and I don't want to short when you have a strong support emerging, and that too after a gap down open like now what you see. And similarly, when I see Bank Nifty, yes, the recent low at 44,800. I'm again referring to Bank Nifty future level. 44,800 is a very strong support for very short term. So closer to these levels, you don't have a great risk reward if you are shorting here. So I am very clear. If you want to short the market, wait for a bounce and then short, not after a fall in last 2-3 days what you have already seen. The risk reward doesn't favor a good short here. I'll be very stock specific and looking at in fact buying with a tight stop loss on index closer to 21,600. Keep a stop loss and look at buying Nifty future, and similarly on Bank Nifty it will be 44,800, and more stock specific you have great opportunity, Shailendar.
Very good morning to you, Mr. Rudra Murthy. Sakshi this side. Well, music to the ears of all those investors who've been looking at, buying opportunities, and you say exactly the same, that this is an opportunity to cherry pick stocks. So why don't you help out with your own stock ideas? Would you be keen to look at the PSU stocks at all at this dip, and would you have any picks from there?
Great question. Very nice talking to you, Sakshi. And let me be very clear. I don't mind being wrong, but I mind definitely giving two-sided opinion. Markets are always supreme, but I don't want to be a great analyst only in terms of giving both the side opinion. But I want to put my neck out and tell these are times where you have to buy good PSU stocks where you have valuation comfort. Now, answering specifically your question of that PSU category and the stocks what you want to buy, For me, even at current price, SBI offers a great buy, and you are getting an opportunity, let us say, to buy SBI today on any dip, and the dip is already getting bought. I will be a buyer in SBI at current level, and on every dips to levels closer to 670, 680, have a positional view on SBI and buy every dip. Keep a stop loss might be at around 650 and positionally go long. I'm not referring to any intraday kind of a move or something. You have to own SBI, buy it on every dip. Even at current level, it offers great valuation for me and comfort for me. Even on chart, the breakout which it has seen and the big move which it has seen from 640 level, that the results very well. So for me, this stock is a buy at current market price, and on every dips to 680. I am looking at targets closer to 850 on SBI to come in a period of might be 3 to 6 months time frame, and you have to buy at current level and on dips to 680, 685. Another PSU stock which I really love at current levels for me is from the power sector, look at Power Grid. So for me, Power Grid at 265 levels offer a great opportunity to buy. And for me, keeping a tight stop loss of around 240, it's a positional buy looking at targets of 300 to 325. And if you want me to pick furthermore PSUs, so for me, even I have seen recently the moves which have come in Nalco, and also National Aluminium post a fabulous result. No doubt it was in ban and it went to ban, came out from ban, again back to ban. So what tells all these things to me is like, you have to wait out for Nalco to get out of ban and buy this script. Even at current levels, you can buy it in equity. And these are few stocks which you can cherry pick. SBI, Nalco, Power Grid, Canara Bank, PNB, lot of list to cherry pick.
Okay, that's a long list, and I'm sure a lot of viewers must be looking at this and noting this down as well. Let's get Gaurang into the conversation as well. We've seen the opening on a slightly lower side, and even Gaurang, you were mentioning that if you get the markets below 21,600, you would be looking at it positively at these levels, and so both of you are in that consensus view. On the opening, have you looked at any of the stocks that have caught your attention?
So, Sakshi, too short a period for me to take that kind of a call, because fundamentally, for nothing changes for us as far as 10-15 minutes of trades are concerned. So I won't jump into that kind of a conclusion, Sakshi. But yeah, I mean, if you ask me in terms of opportunity, post the numbers that we've seen of some of the defense PSUs, I think, and we already discussed that even earlier. So my sense is that, and yesterday I was reading a report that Bharat Dynamics Limited has secured an order from the government, defense forces, BEL and BHEL. These are the two companies that I was looking out for. And yesterday there was a news flow that BEL has also able to successfully secure an order from the defense ministry. My sense is that, and we saw numbers of Hindustan Aeronautics Limited as well, a decent set of numbers in terms of performance. So defense is something that you can look at. I already spoke about one infrastructure company in terms of investment idea. And I think my sense is that now that we have a little bit of more clarity in terms of post the general election, who's going to form the government. So belief is that infrastructure spending is going to pick up speed and momentum, and all those companies, whether they are government or private owned companies, which are associated with road construction, freeways, expressways, highways, companies which are involved with solving the problem of last mile connectivity with respect to Indian railways. All those companies are something that you should keep your eyes on in this kind of fall.
Right. Sakshi, I'll just take a detour to the market and mark prices. Since the action is in PSUs, that's where we are in terms of prices. NBCC circuit up 5% higher, 130.6. SGVN is gathering pace, 6% higher, 115. The beauty of SGVN at the moment, only on stock prices, remember this is not an invitation to buy or sell, is that it had a low of 104.35, and from then on it's reversed on its way up to 115.20. Very strong volumes, about 3 crore shares have already been traded. National Aluminium we've discussed, 4% higher, 147. BPCL 0.5% higher, 586. You have HUDCO 1.4% higher, 182. Steel Authority 1.7% higher, 120. Let's look at the pain points as well. We present both sides of the picture to our audience. There is pain in RCF, the fertilizer company, 6% lower, 139. There is a down circuit on IFCI, and rightly so, 5% lower, 53.15. There's a down circuit on IREDA, and rightly so, 5% lower at 154. IRFC, which was yesterday's darling, is slipping 4% lower at 147. The Nifty is now almost 192, 193 points lower. The cut on the Nifty Bank is 579 points in the red, and the cut on the IT index is 715 points. Let's look at the broader markets. I see all 19 indices in the red, Sakshi. It's a rare occurrence. We've normally marked a lot of them in the green, but the top loser is the IT index, 37,490 for you. The PSU banking index is 1.7% lower, 6610. The Nifty Bank is 1.3% lower, 44,900. Mid caps have lost 1.4% on the index level, and the only good point I'd like to mention is the record highs in this kind of a market. That shows how the money is moving in, and no surprises, Apollo Hospitals, Bajaj Auto and Bajaj Holdings. Sakshi.
So sorry, I was on mute. I just wanted to ask Mr. Rudramurthy on Adani Group stocks, especially Adani Ports and Adani Green, where Moody's upgrade has come in. Would you look at these stocks positively after this upgrade?
Yeah, definitely, Sakshi. On chart, Adani Enterprise and Adani Port both looks very good, and for me this stock is now consolidating for last close to 10 trading sessions, and it is in this range of around 3080, 3100 on the lower side. I'm referring to Adani Enterprises, and on the upside you have that 3250 kind of a band. So once this stock makes a move above 3250 on Adani Enterprise, yes, a fresh move will start on the upside. So I will be a buyer in Adani Enterprise on every dip. I definitely understand valuations as a chartered accountant, but then these are stocks where the growth visibility and the future earning visibility is what makes the valuation keep aside, and still the price moves will always happen. But no doubt when you have the corrections in these kinds of stock and you get that fair value, that is when you have to buy. But purely going based on chart, I can tell you that every dip to 3100 is a buy, and right now it is in this range of 3100 to 3250. Let it break above 3250 on a closing basis, then fresh momentum will come on Adani Enterprises. But definitely a stock to buy at current level with a 3100 kind of a stop loss. And if you are a person looking for momentum, then wait for close above 3250 and then buy. Definitely don't attempt any shorting in this stock. And when it comes to Adani Port, very similar patterns you are seeing. Again, good consolidation after a big breakout. What Adani Port saw from levels closer to 1220, and now again having seen that move above 1200 to 20, stock is consolidating. So any dips to levels closer to 1240, 250, even at current level, I will buy some amount of my quantities of Adani Port and slowly keep accumulating it on any dips to 1240, and let this stock again cross levels of 1280 and go above those levels on a closing basis. A fresh momentum will start again on this stock. So for me, both Adani Enterprises and Adani Port are buy at current level and also on every dip.
Let's get Gaurang into the conversation. Gaurang, a huge chunk of retail money is invested in HDFC Bank, as also it's been one of those corporates that all of us have looked up to in terms of how long-term wealth has been created. But last 3 years have been painful for the bank, more so the last 3 or 4 months. What is your long-term view on HDFC Bank? Now, it's at 1367. This is the lowest that we've seen since June of 2022. We'll discuss this, the technicals, a little later. But how do you see this one in terms of the change in sentiment that has come in?
If I have to answer your question in one line, Shell, I would say start a SIP in HDFC Bank.
Wow.
But if I have to elaborate it further, yes, it has been a little bit of pain point for the market as well. Given the kind of underperformance, given the kind of weightage it has not only in the Bank Nifty or Nifty Bank, but also on the larger indices, that is Sensex and Nifty, and possibly a contributor to the pull down levels that we are witnessing right now. I am still have those memories of fresh Shell, and very recently we saw the merger of the big two, HDFC Limited and HDFC Bank, and all of us were gung-ho on the street. I did not see a single expert on the street who said that this is negative. So I think these are some teething trouble times, if you ask me, for HDFC Bank. As a brokerage house, we've been always positive on this bank, as well as the entity before the merger, that is HDFC Limited. And my sense is that you cannot forget the wealth creation history of HDFC group companies, whether it is HDFC Bank or whether it was earlier HDFC Limited, whether it is to do with HDFC AMC or whether it is to do with HDFC Life. We are maintaining our positive stance on HDFC, and we are maintaining our targets of somewhere around 2000 or beyond that from a longer time horizon. So start a SIP.
Okay, that's the view coming in on HDFC Bank in terms of how to add it to your long-term portfolio. Let's get Mr. Rudramurthy going on HDFC Bank. Sir, the value that you see on HDFC Bank at the moment is the lowest since July of 2022. A bit worrisome on the monthly charts as well. What are the medium to long-term charts of HDFC Bank telling you?
Shailendra, I'm very, very clear with my levels on HDFC Bank, and I want the viewers to also have that clear. First of all, it had a strong support at 1460, and HDFC Bank broke that support of 1460. And having broken 1460, now that same level is acting as resistance. So trading and investment are two different ball games for me. You can't play the test match like a T20 match or a T20 match like a test match. Even though both are cricket, only few players like Virat Kohli can adjust to both the scenarios and time frames, like how you have the late Rakesh Junjunwala sir who can adjust for both the short-term trading as well as long-term investment. But if you can do one very good, that itself is great for lifetime. But as a trader, if you ask me a question, HDFC Bank, first of all, post its results with great volumes, it is seeing a sell-off. So I am referring to a short-term trader, or even if you look at a medium to longer time frame chart, I wanted to first of all come at least above 1460. And now what is happening is, having broken 1460 decisively with good volumes on chart, it is now, that 1460 is now acting as resistance. And having broken that 1460 level, which is now acting as resistance, look at the recent low which HDFC Bank had at around 1380. Even 1380 has got broken now today. And if we see a close below 1380, I will tell you now that 1380, which was a support,
Right, sir,
will expect as resistance. So I will not buy HDFC Bank at current level. Wait for price action to turn positive before you buy it.
Okay,
Right.
That's what the view is on HDFC Bank. Sakshi, just a moment, please. So, the point, ladies and gentlemen, we are trying to make is that there comes a time in the life history of all blue chips that they do nothing for a space of about 3, 4, 5 years, and maybe HDFC Bank is going through that phase for the last about 3.5 years since November 2020. The stock has remained sideways for whatever reasons, but the balance sheet has improved. Look at Kotak Bank, nothing for the last 5 years, and the stock is resting on its laurels. The kind of money that people have made in Kotak has been insane over the last 2 odd decades. So these are times when you accumulate the stock in a very simple monthly SIP format, as Gaurang has mentioned, and then wait for the good times to grow. And they definitely come. Hindustan Unilever has done nothing for 10 years at one point of time. Reliance has done nothing for 10 years at one point of time. And after those 10 years are over, the stocks have more or less, in fact, more than doubled in the case of Reliance, gone up more than 3 times in the case of Hindustan Unilever. So these are trying times for long-term holders of HDFC Bank and Kotak Bank. But be there, and if you haven't added in your portfolio, according to Gaurang, you must. Sakshi.
Absolutely. And for HDFC Bank, there are 31.4 lakh shares that have been traded for the worth of 431 odd crores. That's big block deals really happening, large trades taking place. So we'll keep an eye out on HDFC Bank through the trading session as well. What we'll do, viewers, is we'll take a very quick break. When we return, we will have both Gaurang and Mr. Rudramurthy with us to share more insights from where exactly should your focus be in this kind of a market. Stay with us.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe from multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines, and many other sectors.
Celebrate 32 years of leadership in business news with Business Today. From the groundbreaking AI cover of Sundar Pichai to PM Modi's exclusive on G20, we redefine headlines. Now our 32nd anniversary issue explores India 2029, the 5-year agenda, with industry titans sharing exclusive insights. So, just BT it for unparalleled perspectives. Business Today, 32 years of leadership, innovation, and business brilliance. Subscribe now. In today's rapidly evolving business environment, when risk is omnipresent, managing risks is no longer just about ticking a few boxes. Businesses need to maintain a panoramic view of risks to stay ahead of the curve. Join us to explore how organizations can rethink risk to unlock new possibilities and become fit for future. At PwC presents De-Risking the Future in collaboration with Business Today.
Welcome back on Market Today. Stocks seem to be undergoing a series of painful moves. The Nifty is down 155 points at 21,585. The Bank Nifty down about 400. They seem to have stabilized after the initial downtick that we've seen. So it's the weekly expiry for the Nifty Bank, as also T-1 for Nifty. Let's get Gaurang into the conversation. Gaurang, you mentioned clearly that PSUs were overheated and valuations is something that we must look at. Surely a lot of PSUs have also corrected to levels which might seem stable or how should I say, with some sort of sanity when it comes to prices. Would you have a buy list in the PSU segment apart from maybe SBI?
Let me try to draw down small investable names with respect to public sector companies. To start off with, positive on NTPC, positive on and power itself, we are extremely positive whether it is government or private owned. So NTPC would be one name in form of power transmission and distribution, because as and when you have more power generating capacities coming online, you will need power transmission and distribution companies to act accordingly. So names would be REC and Power Grid. With public sector banks other than State Bank of India, I have mentioned PNB in one of the recommendations as a fundamental long-term investment idea. Others would be Bank of Baroda and Canara Bank. And Canara Bank, 26th of this month would be the date where the management would possibly decide on a stock split. So that's the other stock. Uh, ONGC, GAIL, and all the three oil marketing companies, uh, we remain positive, other than HPCL because that is under review. I've mentioned defense names, BHEL and BEL. Uh, Other than that, we have Mazgaon Docks, we have Cochin Shipyard, we have Bharat Dynamics, we have Hindustan Aeronautics Limited. And I think names like though this was a buy recommendation a long time back, Shell, but since the target price is in place, we now have a sell recommendation, and the company is Engineers India Limited. A very well-defined company in terms of infrastructure creation for green hydrogen. So, possibly at lower levels, you can have a look at Engineers India also. So that would be a broad universe of companies as far as public sector companies are concerned.
Okay, so we have a list of about 10, and some of them have also been mentioned by Mr. Rudramurthy in terms of how they look at technicals in such counters, in particular Canara Bank. Of course, February 26th approaches when Canara Bank would be announcing the ratio of the stock split. At the moment, the counter seems to be in a bit of a downtick, 548 for you, and this is the last time this price was seen was in the vicinity of May of 211. So these are the two stock moves and the two themes that the technical and the fundamental part of the market seem to be agreeing on. Thank you from our side, Gaurang. As always, it's such a pleasure to have you and to listen to your wisdom-laced views as far as the sentiment on the short term is concerned on Dalal Street, and what to do in terms of taking advantage of falling prices. Thank you once again.
Thank you, Shel. Thank you, Sakshi.
Thank you. All right, we will continue the conversation with Mr.
Sakshi, we'll
Rudramurthy.
again look at prices.
Yeah.
Yes. Sakshi, just a couple of stocks I need to mark. National Aluminium is something we need to look at in detail now. There are two reasons behind this, and they are fairly sensible ones. We are at 9:45, so the first half an hour of trade has lapsed, and the stock has been able to hold on to its gains. The chart is in front of you. Mr. Murthy, what are the charts of Nalco telling you in the most immediate future? And this is a price we've last seen in the month of May 2010. What is Nalco telling you?
Yeah, Shailendra, I'll be very clear on my view. Nalco has now a very, very strong support at levels closer to 135. So for me, it is a great risk reward to buy at current level. And let me put my neck out and tell, Nalco is not a buy, but a great buy. Keeping a stop loss of 135 at current market price, I will start buying. Any dips in this stock to levels closer to 140 will be a great buy, and this stock will go back to its highs which it has recently made at around 165 zones very quickly. So I will be a buyer on this stock at current market price and on dips. For F&O traders, it's not available because it's in ban. Also look at yesterday's results, it was definitely good, and similar patterns came in Hind Copper. The stock came out with good results, next it went to F&O ban, and that stock at that point of time was available at mouth-watering levels of 140, and later what happened in Hind Copper is just a history. I won't be surprised if similar pattern happens in National Aluminium. This is a stock even today you can buy in cash market. Don't miss this great opportunity to accumulate this stock. Buy it once it is out of F&O ban also. Hold it positionally for a big move. Initially it will test 165. Eventually can even move towards 200 very soon. It is not a buy but a great buy.
Mr. Murthy, we'd like to give you full marks not only for your wonderful grasp of technicals, but also for the phenomenal theatrics that you bring on table. So not only is Nalco a buy, but it's a great buy at current levels. Sakshi, what are you watching? I think HUDCO makes also sense to look at.
Yes, absolutely, Harpo. You've been pointing out for a long, long time, Shell, and we've seen the kind of move, in the past. And again, it's about a 5% high-end trade, 189.3. And this, in fact, if we look at the share prices momentum over the last few months and years, this will tell us that, again, the stock is near its all-time high, but like little lower, I believe. I think the all-time high was 205. It's right at one or 226, in fact. It was right now it's at 188. Your sense, Mr. Murthy, could you tell us on HUDCO, what would you say?
Yeah, Sakshi, a very, very important point. I want to bring this to the notice of our audience. Why do you want to buy stocks like Yes Bank, Paytm, when you have options like National Aluminium, when you have options like Putco? Even for me, HDFC Bank is a better buy than buying an Yes Bank. In fact, I made this very initial statement, especially to retail traders and investors, say no to Yes Bank. And forget the levels earlier of 400, whatever. Even at current price, if you have Yes Bank, you have to get out and switch to either ICICI Bank or even for that matter, HDFC Bank. Similarly, if I see Hudco, this is a stock to buy. For me, strong supports for this stock emerges on chart at around levels closer to 160, 165. So 188, even at current market price, it's a buy. And I will be looking to buy on any dips also to 175 level. Keep a strong target, and it can test those highs of 220, 225, which it has made recently. And every dip on Hudco is a buying opportunity. Great, great chart pattern, and buy at current level and on dips to 170, 75 zone.
Okay, so that's as
Okay.
far as HUDCO is.
Sakshi, two stocks I'd like to.
Sure, Shell. Please go ahead.
Sakshi, a stock I'd like to mark is Bajaj Auto. We've seen a change in digit. It's now above 8,000 rupees, and I'm presuming this is amongst the top gainers, not only for the Nifty, but also for the F&O space. Let me just get this thing right. But Mr. Rudramurthy, how about some long-term views on Bajaj Auto? The stock has been on a tear, led mostly by a very strong quarterly performance and a very good move on exports. What is the counter telling you on the long-term charts?
Shailendra, a very, very good stock to have it in your portfolio. And see, these are stocks which you can buy at any price. And there are few stocks which you have to avoid at any price. Even at zero, you should not buy them, is that Paytm and Yes Bank kind of stock. I always say no to Paytm because you keep paying M to M if you buy Paytm. And when it comes to Bajaj Auto, forget the price where it is today and where it was before. These are stocks, even if you buy at higher price, over a period of time, your entry price will come back. Might be okay, today valuations are higher, you entered a great company but at a higher price. But that great company over a period of time will give back the price where you would have entered by chance higher. But that is not available in companies which are bad. So for me to put everything very small, short, sweet, Bajaj Auto, buy at any price. That will be your next Titan. That will be your next moves which you have got in stocks like, let us say, your Sun Pharmas, your Wipros, your bigger HDFCs of earlier past, your ITCs. So similar to that will be my Bajaj Auto, buy at any price.
Okay, so that's the view coming in on that front as well. Just let me briefly mark for all our viewers. Remember, there are three IPOs that we are going to simultaneously list today on the exchanges: Rashi Peripherals, Jana Finance, and Capital Small Finance Bank as well. So we are going to be seeing all these three lists, and the pre-open trades, they do suggest to us that Jana Small Finance Bank is settling in at 396 rupees against an issue price of 414, so slightly lower. When it comes to Capital Small Finance Bank, it's settling at 435 against an issue price of 468, again lower. But Rashi Perils is looking at a 335 rupees listing price indicative in the pre-opening trade against an issue price of 311. So that could be in an uptick. Just wanted to point that out for all our viewers. 10 o'clock is when the listing will happen, and we will revisit that. But Mr. Rudramurthy, to you, we've discussed a plethora of PSU stocks, be it from the banking space, the power space, metals pack you've mentioned as well. I want to understand from you on the railways pack per se. What's your view? Do you have any coverage on any of the stocks here? We did see some of the stocks like IRFC, RVNL really shooting up through the roof even yesterday, despite a very, very strong move in the past. IRCTC came out with its earnings. Where exactly are you keeping your focus as far as the railways pack is concerned?
Sakshi, for me, yesterday you had great opportunity to buy this counter. For me, still the move in energy, railways, defense is still not over. I understand the very steep move which it has seen might be for last 2 years kind of a theme in all these areas, but for me you have to use dips to enter into great stocks in this particular counter. I don't want to buy any public sector undertaking which is available where valuations are expensive, where I'm not comfortable with their business model, or where I'm not even comfortable with their capital allocation plans. But however, you have still a lot of good companies. 2 year move is not a long-term move. It is a decadal kind of a story what I see in public sector undertakings to come. And I gave some of the names to you, but I am with you in terms of both defense as well as in terms of railway stocks. You still have some good names to buy. So for me, RVNL is a great stock to buy. No doubt it had a steep move after a breakout at levels closer to 200. It went non-stop. From 200 it went non-stop to levels closer to that 325 to 340 zones, and then it has now corrected, and yesterday it gave that great buying opportunity. Or even at current level I will buy. Keep a stop loss might be at around 225. Enter RVNL at current price, or even on any dips to 235, 240 kind of a zone. And for me, RVNL is a buy. If you have to pick up IRCTC, yes, look at the monopoly what they have in that kind of business, and in the terms of even the chart patterns, whatever I see on IRCTC, a great support level for me to buy IRCTC will be around 850. This is not like the RVNL chart pattern where you still get opportunity to buy it lower. So I will wait out for IRCTC and buy it closer to 850 rather than current level. But RVNL will be a buy at current level, and on dips to 235, keep a stop loss of 225, and I'll still be a buyer there. But when it comes to PSU, the comfort in terms of valuation and the comfort in terms of the price action which has yet to come is still there in PSU Bank, and in that my top two picks will be SBI and PNB. For me, even from current levels of 120, Punjab National Bank is headed towards 180 to 200 zone. This is a return of 60-70% from current market price. If it can come even in 1 to 2 years from current level, irrespective of market, I will be more happy to buy PNB. I'll be more happy to buy SBI, which are very attractive both in terms of chart as well as valuation.
Right. So these are the picks that Mr. Rudramurthy has emphasized again upon as far as the PSU banking basket is concerned. PNB and State Bank of India. Sakshi, now it's almost 9:55. Let's take a detour to prices and look at how volume is shaping up. We've had the first half an hour of trade, and it's essential to look at volume buzzers both on the long side as well as the short side. Okay. MTAR Tech, the counter's down 8%, 9% at 1707 rupees. About 7.6 lakh shares have been traded, and this is about 3.5 times the 5-day trading average as far as prices are concerned, and that's because of a very sharp disappointment when it comes to the earnings of the third quarter. So third quarter net profit for MTAR Technologies has actually gone down to just 10.6 crore rupees versus 31.7 crores year ago. Revenue has also slipped down to 120 crore rupees in the third quarter compared with 160 crore rupees in the year ago quarter, and of course there is a drop in EBITDA as well as EBITDA margin. So that's the reason behind MTAR's dismal performance. You have a company called Kalpataru Power Limited. This is Kalpataru Projects India Limited, KPIL, 966 rupees, fresh record high, 7% higher, and about 1.9 times the traded volume. And Sakshi, Bosch, we have about 54,000 shares traded, 26,868, and this 54,000 shares is 1.8 times the average. Let's look at the most active counters. No surprise here, IRFC, 1,000 crores worth of transaction happening at 154.35, SGVN 614 crores, NHPC 535 crores. Sakshi, what are you watching?
Well, Shell, it looks like it's also going to be Oro Pharma that we need to point out. I think there is a US FDA on one of the medicines at a plant as well. Mr. Murthy, could you give us your view? 5% down on this stock?
See, if I have to see the chart patterns of Aro Pharma, yes, the stock went up from those levels of 450, 500. That was the time when valuations were very attractive. But again, having gone to those levels of around 1,000, 150, 1,160, continuously this stock is seeing selling. For me, irrespective of market, even when markets were up, this stock was simply moving down. Look at the candlestick as well as look at the price action from 1st of February till today. Every candle is a red candle. And I don't want to buy this stock. I will definitely say exit if you have Oro Pharma with you at current level.
Right, sir. Okay, so that's the view coming on one of the highest beta pharma stocks as far as the pricing is concerned today. We'll take a quick detour to markets. It's almost 10 a.m. time for this show to end for a while. The index is now 137 points lower, 21,606. Let's look at the stocks that are contributing to this downtick. No surprise here, Infosys is down 2.2%. It's contributing 34 points to the fall of the Nifty. HDFC Bank is contributing 27 points to the fall of Nifty. TCS and L&T about 14 points each, and Sun Pharma, which is down about 1.2%, is responsible for a 5% downtick on the Nifty. Stocks that are helping the Nifty, well, Bajaj Auto 1.3% higher, record high. Coal India 1.4% higher, 458. ITC, M&M and Axis Bank are also in the green. Yes. Let's look at how prices are moving otherwise as well. HDFC Bank 1.72% lower at 1370 is the top loser as far as the Nifty is concerned, and also in terms of contribution it's at 1442 crores in terms of turnover. So today's FII selling number is something to be looked forward to as far as selling pressure is concerned. Mostly it will be negative. What else is moving? Tata Power, after a very strong drubbing, is moving at 366.25, a third of a percent higher. Torrent Power is in the green, 111.19, about 0.2% higher. Strong moves coming in on ABB. So it's the power sector that's throbbing with gains. At the moment, ABB at 45.30 is 1.5% higher. We'll draw this show to a close, ladies and gentlemen, and please remain glued to Market Today as also Business Today for all your news needs on the financial side of the market. Thank you from our side.
fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe for multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines, and many other sectors.
Celebrate 32 years of leadership in business news with Business Today. From the groundbreaking AI cover of Sundar Pichai to PM Modi's exclusive on G20, we redefine headlines. Now our 32nd anniversary issue explores India 2029, the 5-year agenda, with industry titans sharing exclusive insights. So, just BT it for unparalleled perspectives. Business Today, 32 years of leadership, innovation, and business brilliance. Subscribe now. In today's rapidly evolving business environment, when risk is omnipresent, managing risks is no longer just about ticking a few boxes. Businesses need to maintain a panoramic view of risks to stay ahead of the curve. Join us to explore how organizations can rethink risk to unlock new possibilities and become fit for future. At PwC presents De-Risking the Future in collaboration with Business Today.
The oldest and the largest cryptocurrency, Bitcoin, is on